Welcome to the Investor Agent Podcast. I'm Steve Seymour, your host, where we help transform the human mindset from scarcity and lack to abundance and wealth, one conversation at a time. Welcome, everyone. You are listening to the Vanguard Realty Alliance Investor Agent Podcast, where we help transform agents' mindsets from scarcity and lack to abundance and wealth. And today we have Shirley Xu. Thank you, Shirley, for being here today. Just wanted to get started. We'll just dive right into it. So why don't you tell me a little bit about your background, how you got into real estate first, and then we'll take it from there.
Yeah, sure, Steve. I was really glad to be here today. And I started I came from China, so many years ago, to attend school and for graduate school. So after I graduated and I got a job here, so I worked for the finance company for 10 years, and it's very stressful. I worked lots of hours, and my kids were young back then, 3 and 5. So one night I saw the commercial and saying, you can invest in real estate, and so I just hooked up. And they said, rain or shine, your rent will come in no matter what. So wow, that's something I can do. So 2003, and I left my job and start real estate and start buying rentals.
That's great. And so how did that commercial, did that come true? Rain or shine, the rent comes every month?
Not really. My dream, Steve, when I first started, and I was just so naive, and my dream is to buy 200 single houses. And I figured, if you after the mortgage, all those maintenance, all those costs, and I will net 200, very realistically. And I said, well, then I'll sit pretty, right, for 200 houses. And then when I get into it gradually, I realized it's not 200 boxes, spit out money every month. So you are actually dealing with 200 families. And it's
200 headaches, 200 problems.
Absolutely, yes. So I realized, and I was like, oh my God, but I thought that's just the way.
Yeah.
That there's no other way. You want to make money, and that's how you do it.
So fast forward, you did, you saw the commercial, you made the switch, you got into the single family rental space, and you built up a nice portfolio, right? Can you talk a little bit about that, and then we can?
So I bought gradually. I bought bunch of houses. And then I sold some. So I do wholesale, rental, and I also do flipping. And then average, so I was keeping 50-ish.
About
houses.
50 houses.
Yes,
yeah.
so houses, and I think.
And how long did that take from when you started?
When I started, probably takes 3-4 years.
Oh wow! So you bought that many that fast? Okay.
Yes.
Okay. Wow.
And I was using all kinds of tools. You buy them owner finance, or you take over the mortgage. You do whatever.
All the different creative finance.
Yes.
Yeah, that's great.
Scale up.
And I'm sure tons of our listeners would love to hear about that. But today we're actually going to focus on what you're focusing on now, which is real estate syndication.
Yes.
So can you just, just to keep it very simple, the first grade definition of real estate syndication so that people understand what that means and what that is?
Well, syndication, basically you are gathering, we see those big buildings, right, cost millions dollars. And normally in the past, I think, got to be those super rich people buying them, and it has nothing to do with me or, ordinary people.
Didn't seem possible, right?
Yeah, it seemed like impossible. And then when I get into it, then I learned that you pull the money together, and then in the syndication, so you pull the money together and you pull the manpower together, and to accomplish one big project.
Okay, so it's really what I'm hearing is versus doing one small single family on your own, you're pooling resources, in terms of financing, but also a team together to take down larger projects.
Correct.
Larger commercial real estate.
Correct.
And can you break that down as to how you got into this, and then also what you're doing in it now?
Yes. So back in 2018, because by then has been landlord for, guess what, 16, 17 years. And so I'm just really tired of it. And I thought maybe let me look around. Maybe there's other things I can do. And so I started looking and fly all over, attend the seminar. And also I tried the stock trading and then realized that it wasn't for me.
Yeah.
And then I look into the business to buy like laundromat or buy the business or restaurant. And I decided that's not for me. So went a big circle back and I just feel real estate is still, it's relatively stable. And then I was just lucky and run into syndication. And so first I just start like tipping my toe into it and I invest one project.
So you started as a
LP, as a
limited partner.
as an individual investor. I'm just an investor, invest in the project. And then from 1 and to 2 and then 3. And then friends ask me, what have you been doing? And I said, oh, you know what? I'm investing in those passive real estate investment project. And then they said, what about it? So I told them what I was doing, what it's about. And they said, oh, we're interested. And so that's when I said, well, let's set up something. So I set up a club. It's called a Golden Bridge Club. The club basically is just a place we gather and share information and learn from each other. Yeah, so that's how that started.
That's great. And one thing you said in there, passive real estate investing, because aren't rentals passive rental?
No, if
that was a loaded question.
Yes, that's a good one. And if you are a landlord, it's not passive at all. And even though, let's say you gave it to property management firm and they manage it for you, but you still have to take the cost and, with a larger expenses and you need to make the decision. And there's a stuff they can't handle, they're going to ask you. So it's never passive.
Never fully passive.
Yes.
Yeah. And with real estate syndication, I know that's one of the things we were talking about before was that's what really appealed to you because you're huge on your lifestyle and spending time doing the things you love doing. With real estate syndication, that gives you that flexibility and freedom to be able to invest passively.
Yeah, absolutely. So you have more time to do whatever you wanted. And for me, I never thought, I'm going to just retire, lie on the beach. It's not my thing, but I think you have the freedom to do whatever you want and either to travel or doing the work or reading. And your time is not limited. I remember at one time I was travel in China up on the mountains and I got a call saying, oh, one of your rental caught on fire. I was like, what I'm going to do? So I don't want to ever get caught while I'm traveling.
Yeah, you're enjoying your time and then you're immediately taken out of the moment.
I know.
Because there's always something. There's always a problem. Mm-hmm. With that said, what are some of the things that if someone's looking at real estate syndication that they should, consider? Because I don't believe there's one path for anyone. Real estate syndication has its benefits, but it might also have its aspects that are not for everyone. So why don't you dive into that a little bit with, what are the things that you kind of have to give up if you're going to be in the syndication space?
Yes, it's if you're talking about on the investor side, I always say it's really there's no right and wrong and method. It's like it's like to be in control for everything. They wanted to hear what's going on. They wanted to get involved. They want to make a decision. And then passive investment, maybe it's not for you. And this is for passive for the people who don't want to get involved. You are just investor. You just invest in the project. But however, choose a good sponsor team. Choose a great project. That's the work you need to do.
well, let me just clarify. So what you're saying is in the syndication space, if you're going to be on the limited partner side just as an investor, think of it almost as like a silent partner where you're not making any decisions, but you're deploying the capital. One of the big things you have to give up is being involved in controlling the deal, because that's part of it. You're investing in the sponsor and the general partner.
Right.
And with that, you're saying, make sure you choose the correct GP. So just for anyone that's listening that doesn't understand syndication, can you kind of break down the structure of how they typically work?
Yes. In the syndication, there's two parties, and one is general partner, and the other one is a limited partner. General partner is the group or the person who does the deals day in and day out, and they're the one to find investment project, and they're the one to get a loan to finance it, and they're the one to managing it, and also take it all the way to eventually sell the project. And then the investor side, you just invest in, you bring the capital.
And that's kind of what you were talking about initially, is pulling the resources. So,
Yes.
certain people are responsible for the aspect of finding the deal, financing the deal, increasing the value, either selling it or managing it. And then the other side of the partnership is really the people who bring the capital. And so where do you stand on that side of it, and why? And just tell us a little bit about your actual experience in some of these transactions.
Yeah, for me, and we're on the investor side, and because I was a GP for a certain project, and then I realized the reason that I got into this is wanted to be passive on the passive side, and not getting to with a GP part that dealing with day to day. So now I'm just scaled up. Before you're a small landlord, and now you become a big landlord. So we're staying on the investor side.
So just make that real simple for people. So like you specifically just stay on the LP side and you deploy capital, but you also raise capital for other syndications as well.
Yes, correct. So before it's me just investing, and now we have a group of people. And so we're syndicate, I raise capital, and let's say we have teams that we work with for long term, and or the team we're looking for, they have a great track record, and they're in the market that we wanted to invest it in, and then we will present the project to the investor in the club.
So basically, with what you're mostly focused on is finding the right sponsors and vetting those teams and making sure that they have the track record so that you feel comfortable investing your own money and then potentially investing or helping other people invest in those syndications as well. Is that really what your focus is? Like your
Yes, it's actually my main focus is most on the capital raise side and also investor relationship side. And because we are now with a big platform, it's not just a small company, so it's a big platform. And this platform it's for capital raise. So you will have different teams. Those are sponsor teams. When I say teams, those are the people who does those multifamilies or the projects day in and day out. That's their expertise. And they will come to the platform to raise capital. And then from there on, and then the platform will vet them. And then so there's like steps to vet them. And then once they decided this is a team we wanted to work with, and then they will raise the capital for them.
Yeah, it's pretty amazing. So you went from watching a commercial about real estate to getting into the landlording space, realizing that it's not passive. It's not all it was cracked up to be. And specifically around your time, I'm sure you did very well financially, but it's time management and now
lifestyle.
and lifestyle. And now you've transitioned into the capital raising space, specifically around raising capital for real estate syndication. And with the sponsors that you invest in, what type of assets are they investing in mostly?
Majority are multifamilies and self-storage.
Okay. And what do you look for in a GP?
Well, number one, of course, is their track record. And you look at now there are so many seminars, to teach people how to, buy multifamily. And so then there are like students, and so you don't want to really invest in someone's deal and they were just starting yesterday, students. Yeah. And so experience in this, it does count. And so we're looking for the team who has a experience, have taken the deal for cycle, means they bought it, they fixed it, and they sold it for profit.
Got it. And how familiar have you gotten with the sponsors? Because I know for me, you're talking about like giving up control, and I think I've had interest in syndication, and this is maybe a selfish question, but maybe some of our listeners are thinking the same way. It's like, well, how involved do you get in vetting them in terms of, do you physically go out and look at the properties? Do you go out and meet them in person? What is your...
Oh yeah,
what
definitely.
Does that look like?
So there's like several steps. Of course, we'll meet in person. So the team will come and we'll meet with the team and to see whether there is a chemistry. But that's only the side. First, what we'll do is we'll investigate the company. And so we use a third-party company to do that and make sure they're legit. And then also we'll do background check for all their key principles, like the CEO, CFO for that company, and make sure they're the main thing I think for investor, for myself and for all my investors, is you're worried, what if you have somebody, talk about a big project and then took your money and run.
Yeah.
Yeah. So we do that, and if they pass the background, and the second thing is we hire the third party to underwrite the deal, and they're not going to underwrite little was very detailed, but they wanted to see the deal whether it's within the guideline, right? For example, a certain area, let's see, Phoenix, if their rent growth is only 5%, and then there are things that they're projecting 10%, and then it's
not realistic.
Yeah. And so if they pass that, then the third.
So you're kind of looking for red flags that could be, indicators that the deal might not end up looking like they're presenting it.
Absolutely.
It seems like that's an overlay from if you were evaluating a multifamily deal, because a lot of property owners will, deflate expenses and inflate, the incomes usually is what it is, but they'll usually reduce expenses or not necessarily account for CapEx or things that they're aware of. And just like a GP syndicator, they might make the deal look more appealing than it really is to entice investors. So that's kind of what I'm hearing, is you're looking for those kind of red flags to see if people have the track record to prove it, but also being very realistic in their projections and giving you accurate data.
Yeah, realistic, that's the word, that's the term. You want it, because every team, when they want the money, and they present the best.
Yeah, the 30% IRR.
Yes, it's like all sunshine and then too. So then you want to look for whether they're too optimistic.
And what are some of the markets that you feel the most comfortable investing in real estate syndications?
Well, we wanted the market. It's number one, landlord friendly, and then the second is the area has to have job growth and population growth, and because those are worth investing in the housing, right? So you want to. It doesn't mean the Midwest doesn't make money, but if you have a choice and why you want to bother with it, personally, I'm thinking, I wanted to invest in those states that their population has been growing in the past 10 years instead of in the states that they've been losing population.
Right. Okay. So you're looking at population growth, job growth, and then landlord-friendly states in terms of the policy and the landlord's ability to. I guess one of the big concerns would be like rent control or a landlord's ability to evict. In certain scenarios where they could get stuck with projects that may not be able to turn the project quickly because if the tenants aren't paying or something of that nature. So anyone that's interested in getting into the real estate syndication space and all this kind of sounds pretty new to them, what would you say are some of the first steps? And then do you have some options to help them?
Yeah. So first, you probably wanted to learn about this area and to join the group. To watch how they present the project and then to see the result. So that's what we have this club. So I was sent out because there's with the team we now have 13 projects and there's 2 went full circle and it's already sold. So currently 11 is going on, and then each team has monthly report, and I will just send it out to everybody in the club. You joined, you participate in the project or not, and you should just read it and learn about it.
So they get to kind of almost watch and see these projects taking place and what the end results look like, even if they haven't invested in them, just by being part of your club.
Yes.
That's great. And what is it? It's called Golden Bridge?
It's called Golden Bridge Investment.
And how does someone become part of that group?
We have a website called goldenbridgeinvestment.com, and they can just hop on the website and click join the club.
Okay. And if you're, do you have to be an accredited investor to be part of the club?
Not necessary, because we do have a project that will accept non-accredited investor.
Okay. Yes. So, and what's the website again?
goldenbridgeinvestment.com.
Just wanted to get it out there one more time for people. Any closing, things that you want to share about real estate syndication or anything that we talked about?
Yeah, I think it's a passive investment and it's real estate. It's a great way to help you to accumulate your wealth. If you look at the stock market, I think a majority of people now own your assets in your 401k. And within the 401k, they're all stocks, bonds. And in your portfolio, you need to have diversification and you need to have real estate. And if landlording is not your thing, maybe syndication, real estate, you can take a look at it.
I think that's such a key thing is, I'm a huge proponent always telling our agents, it's so important. You guys sell real estate, start investing in real estate. But a lot of them quickly realize, the landlording game is not as easy as I thought. And we've looked at, what are other avenues and pathways that we can help empower them to create wealth in real estate? And syndication is one that we're looking at very heavily and encouraging. So just a couple more things that I have questions on. I want to, maybe I'm circling backwards, but can you share how many units that you've essentially participated in or approximately, if you're not sure? In terms of
I'm not really sure because all the projects that we invest in, they're all large projects.
Yeah.
Like one project is 300 units.
Yeah.
So 400, we just did one in Phoenix. It's 460 units.
460
units.
So
now in East Coast, where we are now, you don't see many community like that. But in southern states, Texas, Austin, Phoenix, they have lots of those communities. Big ones. And
do you have any idea how much capital you've raised since you've started doing this?
I think a lot.
A lot?
Yes, a lot. I in our club, and before I thought most investor would be the one who has W-2 jobs, don't have time to do landlording, and but now I'm looking actually 40% of investors, they're all landlords. Yes.
And they're looking for an easier pathway.
Yes.
Yeah, because as a landlord, it's a great, over the past few years, at least, maybe not right now, but would have been a great time to refinance, take advantage of that appreciation and equity and low interest rates, and then redeploy that capital into real estate syndication. So that's always a great option. Do you mind sharing just like two more things? Do you have a mentor, or did you have a mentor in real estate, and what does that look like?
Yeah, mentor is always important. Yeah, I still have a mentor.
Okay.
And so we have monthly or weekly meeting, but it's a group mastermind group. And I never believe you should be on your own. And there's always people they can share the experience and lead you to the right path.
And then do you have any courses or books that you can recommend for real estate syndication?
Oh, there's a ton of them. On top of my head, I don't remember any, but
Okay.
that I can share with you later.
We'll follow up with you on that and post that in the comments. Shirley's recommendation for training. So thank you so much for being on today. We really appreciate it. Hope this was valuable for the listeners and that you guys got some really good content and information. If they are interested in reaching out to you about real estate syndication, should they just go to your website, or is there any other way for them to contact you? They can just call me.
Yeah, they can just call me.
And we'll post your phone number in the comments then.
Yes.
Okay. Sounds good. Well, thank you very much, Shirley.
You're welcome, Steve.
Thank you for tuning in to the Investor Agent Podcast today. We hope you found it valuable. Please tune in weekly at theinvestoragents.com.